Thanks for that introduction. My name is Pablo Zuanic. I've covered about 40 stocks over the last 40 years, mostly in the US and Canada. I'm launching my own research subscription service and consulting services also, Research Bespoke, so that's a little advertisement. I'm the interviewer here, so Mitch is going to be doing all the talking. But Mitch, founder and CEO of Merida Holdings, of course, Capital Holdings. Tell us a little bit, maybe anecdotally, what was the interest in cannabis, not only from a financial perspective, and then a bit more about Merida Capital, and then we'll delve into more details. We'll try to divide the discussion in three things: about you and your company, then about your lessons learned in North America, and then, of course, how we think about Europe, European investing.
Right. Well, thanks, Pablo. First and foremost, Merida is on its fourth fund. We've deployed about nearly $400 million in the cannabis industry worldwide. 75 portfolio companies. We're also kind of an operator in the United States. We operate in 6 states right now, I think, having sold off 4 or 5 entities. And my interest was primarily 2 things. Number one, I think it was said before, Sean knows a lot of the U.S. kind of buzzwords, and it's a $100 billion market that is only about $20 billion legal now. When I first got in 2012, I think it was $1.2 billion legal. So you could see the shift to a legal market, and with that shift comes a massive amount of infrastructure, compliance, governance, and I think they were covering on the panel before, the infrastructure that needs to be built in Europe. There's no infrastructure right now. So there is a lot of unknowns, but that's also what the opportunity is.
So you're saying 75 companies. Just maybe can you break them in terms of parts of the value chain, regional MSOs, ancillary services?
We only own MSOs through having sold, I think, 3 or 4 companies to them. Our primary investment, what we try to focus on, is the misunderstood or underappreciated elements of the value chain. So right now we're heavily invested in the medical side, precision dosing. In the United States, we've already moved on basically from the medical side, even though most of the licenses were granted that way. So we always had a perspective that the MSOs are adult use companies, masquerading as medical companies, and that that the shift from medical marijuana to cannabis-based medicines is going to be a massive shift that almost no professional investor in the United States is even focused on.
But, given that you brought it up, does that mean that you're delving more into the biotech side of things?
Yeah.
Looking for the next GW to some extent? Because we
Yeah.
haven't seen much, right?
Well, we definitely, I think they covered this on the last panel. I think the one thing that they didn't sort of conclude is that if you're doing a lot of research but there's no infrastructure, one of the great areas could be clinical research, like a CRO that you can invest in, or precision equipment that helps the researcher. So there's a lot of ways to invest in the building of this value chain, specifically on the industrial side. When you go out into the hallway now, you see Agilent, you see Shimadzu, and I remember buying a Waters machine and having to buy extra valves because they didn't make cannabis machines. And when you're extracting cannabis and you're one of the first people to be doing it on the East Coast, there's no parts for your equipment. So I think it's so different now. It's so much more evolved that if you want to do a clinically medical-focused business, you can do that now. Whereas 10 years ago, which is nothing in the evolution of the world, 10 years ago, you didn't even know where to begin.
So just staying on that, so when you
Yeah.
think about, I don't want to say the rec side of things, but maybe the wellness side of things, how do you think about the ancillary services out there, whether it's tech, whether it's ag tech?
Yeah, I think telemedicine is a huge opportunity in telemedicine. I think there's a tremendous opportunity in compliance, because whenever you look, what we try to do is we look at what is existing, what are the regulatory frameworks, and what are people doing with respect to reacting to that regulatory framework. Right. So when you think in the United States, the biggest thing is getting medical cards used to be a very specific thing. And now you have adult use markets, so the medical card business has kind of leveled out. But we're very focused on the medical card companies that are taking Leafwell, one of the companies that's here. It's based in London. What they're doing is they're taking the information they're getting from medical cards, anonymizing it, making it HIPAA, which is the United States version of medical data compliance. They're turning it into actual real-world evidence so that people can make better decisions. That data is going to be worth a tremendous amount of money to insurance companies, anyone who wants to make any kind of risk-based assessment. So we love that part. We're obsessed with finding things that people just aren't investing in, because they misunderstand or because there's a tremendous amount of friction to finding the value there. So, that's why I think this world, I think everyone's very sedate on the investment side because they feel like there's so much capital, but the FOMO is gone. I think it's the best time to be operating or investing because you don't have to cull bad impulses anymore. There's no free capital. There's no margin of error. So companies go to an investor like me already knowing how their behavior has to be to attract capital. Right. And so on the research side, there's no more like, here's a deck, I have a term sheet, invest by the end of the week or we're out. Now it's please look at us and stay engaged, and so it's a totally different environment that I think is an amazing time to be an investor in.
But I mean, just staying on the Merida way of doing things, in terms of the way you evaluate companies, opportunities, how have you evolved? I think it's more than 7 years, right? I think close to 2014.
We're not,
I mean, explain like what got you excited at the beginning, what didn't work, and I mean, because this focus that you're talking about right now, it doesn't seem to me was the case 5 years ago, right?
Absolutely not. Early on, we invested in what we thought were fundamental technologies, stuff that helped growers simply, the first version of a grower, and it's hard for people in Europe to even understand how rudimentary the United States was, but you had the most robust illicit market you can imagine, right? Whereas in Europe, you may have growers sprinkled throughout, the landscape. In the United States, you had one state that was growing, millions and millions of illegal pounds, shipping it. So you had this huge infrastructure of illicit, but most of it was based on shipping from California or from Colorado or from Canada. And so the way we evolved, we started with just giving people tools that allowed them to grow at scale indoor, which had never been done legally. Just to comply, just to be able to say, okay, I have a harvest every 52 days or every 55 days. I'm using certain lights. I'm using curing technology. I'm not going to have moldy products that can't pass lab testing, because that was the first infrastructure play in the United States was just getting your product to market in a legal framework, which was very difficult for a lot of operators. I mean, even big operators were failing tests or, their products weren't meeting quality control. I think Europe is so different because the quality control is already expected. GMP is already expected. We own a lab that purifies cannabinoids in Italy. They're one of only 3 companies that can ship raw cannabinoids for APIs into certain countries. So you have a much different infrastructure here that's more pharmaceutical already. The United States didn't have that. So we were investing in, the first CEO of most companies, and I'm sure you saw this early on, were the grower. Growers as CEOs, not good, right? The compliance was terrible. The governance was terrible. They didn't know how to access capital. So we were just focused on opportunities in helping the first, let's call it the first Cannabis 1.0 grower become an indoor grower who could spend $10 million on a building and know that they could produce products every harvest. Right. It's far different than where we're at right now.
Now, just, here maybe for the audience, we had a speaker before from a hedge fund, your venture capital. Maybe just explain the way you're looking at things differently, maybe from a hedge fund. You can get in earlier, maybe even pre-revenue. Again, if you're agnostic in terms of regions, but just in terms of the investment process, if you can expand on that.
Yeah, well, so we build...
And whether it's private mostly or public.
Yes, so everything we do is private. So I'd say 80% of what we're looking for are companies that fill a gap that is fundamentally large from a total addressable market, but is misunderstood or underappreciated. We then work backwards to understand what is the friction in filling that gap. And then we don't necessarily look for the perfect company. We look for a subset of companies that do that thing. It could be, in Europe, it's going to be, I think it's going to be a lot around the medical side because you already have like a country like Germany that's already been, they've already installed a legal medical market. And then we start to look at, all the fundamental things that anyone else would do. What's your business plan? If you're pre-revenue, if you're already operating, what are the traditional economic metrics? We then have this extra layer that we built specifically for cannabis companies called the adoption score, which is what is the future adoption of your product? What is the friction to that adoption? And then that is about 100 different filtering things that we use that we've learned over time, like you said, the evolution over the last 7 years, to then work backwards to find a company that we think can rise above its competitive landscape. But there's no such thing as a perfect company. So we often invest in 3 or 4 companies in each vertical. So we identify interesting verticals and then we work backwards to backfill with companies that we think can fill them.
Maybe stay on that point. Can you give an example of maybe 1 or 2 companies that did very well following that approach that the way you chose them?
Yeah, well, one of the things we're really interested in is if you think about worldwide cannabis usage, very little of what you've done, any of us, the biggest consumers in the world, have done nothing online with respect to their purchasing, right? Everything has been done through, whether it's on the phone or, through delivery. Think of the illicit market. No one's going historically to websites and ordering and using menus. And so we're very focused on the digital, what we call the digital desktop, both for the consumer and both for the operator. Because none of these tools existed 20 years ago. One thing we're specific is the geolocation of consumers, because if you think of any other product, everyone here, if you were to buy something on Amazon or Alibaba or anything, they know a lot about you on your phone. But they can reach you because they're legal products. Cannabis companies historically have no idea who their consumer is because there's been no online activity. Yeah, right. So we've invested heavily in that infrastructure, New Frontier Data, Media Gel, even the medical card companies. We think that they're going to learn a lot about the consumer, right. And companies often want to find their consumer easily. So we're hoping to basically dominate and corner that component of the digital desktop for the consumer.
Understood. And then just obviously concentrating in Europe and maybe Germany specifically. I mean, someone said before that the regulatory landscape is still unclear, hard to make decisions. How are you thinking about investments in Europe or in Germany in particular?
I love the entrepreneurial landscape of Germany because it reminds, and Europe in general, and it's always very refreshing to see when you come to an event and you can see sort of the excitement of these companies that are pitching directly to potential users or consumers for the first time. I mean, obviously PAX is here and Curaleaf, companies that I've known for many years. But when I look at new markets that are opening, I try to look for the entrepreneurial opportunities that can be built. They don't have to be fully mature, but one thing is clear. You want to invest in operators who are more nimble around regulation, who aren't married to one specific methodology. So when someone would come to us, like for instance the lab in Italy, they weren't focused on here's our end market. They were focused on we are going to comply with whatever the rules are, and then we'll find an end market. So sometimes you have to take that leap, which we call the fragmentation gap. So we're always interested in, and I think Europe, the biggest thing is, are we investing in an adult use market, or are we investing in a research-based market, or are we investing in a GMP medical market? I'd say you're investing in all those things. So we're going to try to find entrepreneurial opportunities that specifically are more nimble, and because when you don't know, when you have the unknown, we're going to look for fundamentally strong operators who know what they're doing and admit it going up front instead of this is my plan and I'm going to create the market. I can tell you in cannabis, more money has been lost with people saying I'm going to create my market than anything. You have to be realistic and understand that this has been consumed by people in such massive quantities, illegally, that it already exists. So sorry about that. So you can't pretend that the market doesn't exist. It just hasn't been a legal market.
Right. Just staying on that point, but focusing on Germany. I mean, there's a school of, first of all, not everything is 100% clear in the case of Germany, right? But I want to pick your brain here in terms of how you think about it. Rec, in theory, could be 5 years out. The medical market maybe doesn't get enough attention, but in my opinion, like someone said before, it could be 10 times, 20 times bigger, right? Yeah. It's about 0.2% of the population in the program. I understand the online pharmacies are a big thing now. Telehealth is available. Delivery is quite inexpensive. And you have these online pharmacies that are doing great business, right? Yeah. I mean, one of them claims like 25% flower share. Right. So it seems that on the medical side, the market could be going through a point that there could be a big uptick in growth, especially if cannabis is descheduled there from narcotics to a regular prescribed substance. Right. But rec could be 5 years out. So how do you view those two opportunities, and how do you position Merida for those opportunities? Yeah, this is going to sound very rudimentary, but this is the truth in early medical markets. We look for operations that replicate what we think is happening in the illicit market. So what we try to do is we try to create a parallel between here's how people consume the product already illegally, and here's the likely way that a legal market or a legal business would replicate enough their experience, because that's what people really, if everyone consumes a product, let's say it's soda, and all of a sudden you have new sparkling waters that are flavored to replicate part of soda but aren't. That's like halfway. In cannabis, you have the exact same product that's illegal now being consumed legally. So we look for businesses that replicate that experience. The reason the United States had such a huge uptick in FOMO and usage out of COVID, because curbside and delivery was
All of a sudden, every state said, you know what? We've restricted this forever. We're going to let it go. So what happened? Everyone whose illegal market experience was stopping them from moving into the legal market. I like delivery. I like the ease of the transaction. I don't want to be in a registry. All those things melted away during COVID. So when I look at the European market, I think of what is the way people, like when you look at the cafes of Amsterdam, is that a winning, I've seen a lot of decks on future cafes. Absolutely not something we would invest in because people are already doing it like that's already available for people.
Right.
What you want is, like in Germany, you want, the reason that the best companies are doing so well on the flower side is because that's what people want to consume on the illicit. So they want the same experience they've had in the illegal market. Now they want legal, and that's why the price parity matters. If price is within 10% of the illegal market, people shift into the legal market. So what you have to do is you have to look for business models, like starting with what I said before about the rudimentary. If you can build a business that has elements of what people liked in their previous cannabis consumption, whether it's curbside delivery, like you said, you're going to find a shift. And we call that the transition to the legal market, right? The normalization. If you're trying to build this hyper-focused, specific legal cannabis business that doesn't have any remnants that touch people's previous consumption, you're going to have it's going to be a tough hill to climb.
Yeah, just stay on that point. So in the case of Germany, one of the issues I see, a lot of the companies are importers, right? There's 2 or 3 local domestic producers, the rest import, and from different suppliers, and there seems to be a lot of turnover, right? The supply sometimes is not consistent. So how do you choose among those importers? Because at the end of the day, I'm not saying that anyone can EU GMP or anyone can import, but given the turnover on the supplier side, you might as well go down further the value chain. But
yeah, I agree. I've always been somewhat cautious about the importation as a fundamentally strong business that an investor can make. And remember, we have to when we're investing, we're partnering with the owner of the company, so we don't own 100% of the company. So we have to factor in what is that company making with respect to how much we can make as an investor. So I don't love the importation business. What I do like is the people that touch the consumer. If you're a German business and you have a clinic and you have a stable patient base and you're doing your best to get better pricing for them, you're going to attract people. If you're, I am a good business person in Europe is going to say, I understand the illicit market, I understand how people want to consume the product, and I'm going to provide that same experience as close as I can, but at prices that are so close to the illicit market, even though you're getting labeling and you're getting product certainty and cannabinoids. So I think that's why the importer can do well, but they have to be at such scale that the capital, that's just such a huge capital requirement to get there. Right. So I don't love that part of the business. I like the people that touch the consumer in Germany.
Right, and there, if you any preference in terms of the clinics themselves or the online pharmacy guys? Any thoughts on that?
I try not to name names early in markets because I think everyone should explore for themselves. But I do think there are 2 companies in Germany that are doing very well. I'm not going to name them, but we've been talking to them forever. We love companies that replicate the illicit market experience, add legal elements that people want, and also can get to scale so they can drive prices down, right, so that they can give people almost a better experience. So yeah, I think there's a bunch of investable companies in Europe, and my optimism is because we're at a place where a lot of that froth is gone, and so as an investor, I can walk in and say things to companies, and the amount of receptivity is so much different now than it was 10 years ago.
I know we're running out of time, but given everything that's happening in the U.S., the good and the bad, bad investment results now, but long term, of course, the outlook bright. Do you think a lot of those investors, are going to be gun shy in terms of coming to Europe, or like you are saying, this is the right time to get in, early on?
Yeah, I think. Well, the good news is for me, there's not a lot of competition for investment dollars anymore because most of the funds who started early in the United States are gone, or they're non-functioning, they can't raise capital. Yeah. I think that there will be the investors that do come to Europe are going to be amazingly experienced and seasoned, which is a good thing for the market. It's not going to be like fly by night. And the other good thing is because Europe missed kind of the capital froth that came out of Canada. Right. You know better than anyone. Yeah. Because that froth is gone, you're not going to have this sugar rush of money pop in and then fast money move out. I think the move to Europe is going to be much of a more long-term sustained wave rather than any, like I said, the sugar high of the quick money that came, it has really destroyed a lot of American companies.
I know we're out of time, but any closing remarks? And are you launching a special European fund? I mean, any comments on that?
We do have, so we have an infrastructure fund that only invests in legal products. So whereas a lot of our funds have operators who technically are illegal under federal law in the United States, we have an infrastructure fund solely focused on just the ancillary elements in the United States and worldwide, and can invest obviously in European companies because they're legal under law.
Okay.
Yeah.
Thank you,
Thanks a lot,
Mitch.
Pablo.
Thanks, everyone.